Welcome back all to the Culture of Currency. There is some news in gold, possibly silver, really gold, that you might want to know if you are somebody who is in the gold sector as an investment or maybe as an active participant. I don't know. But there is a large mining operation that hit the skids a little bit this week. So let's read the article and then synthesize exactly what it is that this is to expect. This could be a fairly large, long-term, I wouldn't say trend, but it's also opportunity. Anytime there's conflict in anything in the world, that means there is opportunity afoot if you know where to step. So it says shares in Hochschild's mining tumbled after continuing challenges at the silver and gold miners' Rosa site in Brazil led to a cut in full-year production guidance and raised cost expectations. We'll get into that in a moment. In European trading on Wednesday, shares fell 12% to 269.4 pence each, or roughly $3.64, after dropping nearly 20% earlier in the session. At Mara Rosa, an open-pit gold mine, Hochschild on Wednesday said it would now expect a full-year production between 35,000 and 45,000 ounces, which is down from previous guidance of 94,000 to 104 ounces. As a result, full-year group production guidance in gold equivalent ounces was lowered to between 291,000 ounces to 319 from a previous target of 350 to 378,000. The fall in production pushed all-in sustaining cost guidance upward, with the miner now expecting to spend between $1,980 to $2,080 a gold equivalent ounce. That's basically the amount of money they're expecting pulling from the mountain, which means there's lower margins to be had. It had previously forecasted to spend $1,587 to $1,687 a gold equivalent ounce. Wednesday updated production guidance follows previous warnings from the miner that gold output at the site would be significantly lower. In June, its shares tumbled more than 20% after it temporarily suspended processing activity at Mara Rosa, while it undertook general maintenance and mechanical filter repair work. It said Wednesday that testing at the processing plant is continuing and that filter performance continues to improve. While the cut in guidance isn't surprising, and its Mara Rosa plant will continue to operate below its capacity at least until early 2026. Hochschild outlook remains positive. RBC Capital Market Analyst wrote its shares should re-rate once production at the facility ramps up and causes free cash flow to rise, the analysis added. The share fall came despite Hochschild's booking a higher pre-tax profit for the first half of the year as higher production and prices boosted revenue. The miner delivered a pre-tax profit of $140 million, up from $69 million a year prior, as revenue jumped 33% to $520 million. This also lifted its adjusted earnings before interest, taxes, depreciation, and amortizations 27% to $224.5 million. Hochschild declared an interim dividend of 1 cent per share. So I know that's a lot coming at you. Basically, the analysis would state that their production that they're likely to see has gone down, and the price to pull that ore from, the open pit mine and put it into the purity of refining has also gone up. So the share price has dropped 13 to 15% as investors basically reduce their outlook in this. We have escalated all-in sustaining costs and now projected that the amount of profitability has gone down, according to, obviously, this Wall Street Journal report. So what's likely to happen based on the Wall Street Journal, the New York Times, and others? Well, one part is production recovery. The company, like Mara Rosa, remain underperforming until early 2026. That's the likelihood, as issues like water filter fixes and contractor disputes, more especially, are resolved. So they think that this could be something that carries over until early next year. What about the investor sentiment and revaluation? We talked about that here in this article. An analyst at RBC Capital Markets believes that Hochschild remains a compelling gold and silver investment, and they anticipate re-rating the stock of this production as it stabilizes and cash flow recovers. That's according to thisandinvesting.com. And we also have, obviously, the cost management focus. We talked about that as well. With cost elevated, Hochschild is likely to emphasize operational reviews. We like to call that efficiency, right? Synergy. The reliability of improvements and tight cost control are crucial for restoring the investor trust. That's according to Discovery Alert and AI Invest. So basically, if you are somebody who likes to buy shares of mining, this might be an opportunity for you to get in while the fire is hot. Because there was a big dip. This company isn't going anywhere because there's gold still down in the ground. It shall be brought up, as well as silver. But the question is, what does the share price hold as that moves back to a normal place, as they're predicting to be early 2026? So thought that was an interesting article because a lot of you like the mining stuff. I've come to know that. And so anytime I see a little article, I'll clip that out, bring it to you, bring you my 2 cents. Though I am not an expert, I just like to read. So that being said, it eventually gives me some type of a backing in said subject. But that's what we have for you today. Thank you so much for watching. And as always, please remember to stay classy and current with the culture of currency.